There's someone from the MSME sector, since we spoke about that, Udayan, at the very outset, saying from the point of view of micro enterprises, self-employed workers who are impacted due to COVID, this is a disappointing budget. The announcement and allocation of 6,000 crores over 5 years for RAMP program is most required, but the outlay is very meager, requires detailing on eligibility conditions. If the employers are not saved, how will employment opportunity be created, and just whom are we creating skilling? While skilling is required, the opportunity for employment is more important. Is that something, again, that needs to be perhaps done, if not in the budget, then outside the budget, to try and ensure that MSMEs get a sense of protection and a belief that they will be part of this growth process?
Most certainly, Rajdeep, and I think if you were asking what could be a disappointment in this budget, I think the fact that there has not been too much for the MSME sector is one of my bigger disappointments. There has been something, though. The ECLGS credit line has been expanded by 50 or enhanced by 50,000 crores to 5 lakh crores. So that, I think, is a credit line which will be used, the emergency credit line, and that is of some help to the MSMEs. But overall, the outlays on these new schemes that you spoke about, like RAMP, they are very pitiful and they won't move the needle too much at all. I have two other points to make, which are along the lines of disappointment. One, of course, is now that we know that the divestment target for next year is just 65,000 crores, which also means that the LIC IPO is probably going to happen in the next couple of months, because the government is saying it will be included in the current fiscal. So it's very mysterious that you'll have an IPO of that size, 1 lakh crores plus, and that will happen in this fiscal, yet you're pegging your fiscal deficit at 6.9%. So I think that doesn't square very well with the very high, quite high fiscal deficit which has been painted for this year, FY22. Now, if you take out LIC, what the government is saying that next year, FY23, X of LIC, you will do divestments of only 65,000 crores. That's a very low number. I think the government may have been stung by its failures of the last couple of years to meet its divestment target, and intentionally set the bar very low this time around at 65,000. Last year, you will remember, was 1.75 lakh crores. So this time the divestment target is quite low, which is probably going to be much lower than what the market was expecting. And finally, on the crypto point that Rahul, you were taking up with our colleague, let me just point out one thing. While it's one thing to say that crypto is being at 30% being taxed higher than equities or bonds, people don't buy, most people I know don't buy crypto for 1 year and 2 years and 3 years. People buy today and sell tomorrow. It's a highly speculative form of trading, crypto trading. And if you compare then that with what is going on in the futures and options market in stocks, today if you buy, say, Infosys futures and you sell it in the evening, you will be taxed at more than 30%. So the government is saying, if you're going to speculate in crypto, then you pay me the same speculative taxation which I have on equities as well, and don't compare it with long-term capital gains and short-term capital gains. So like to like, speculative taxes are probably in the ballpark regime or ballpark area of what the government charges across asset classes anyway.
Ashok Wadhwa, CEO at Ambit, your sense of whether the government's been harsh, because if you look at social media, especially right now, a lot of youngsters who actively trade a part of their incomes on crypto assets are a bit shell-shocked at what's happened. But this is, as Udayan points out, what you need to pay if you're investing in a speculative equity asset as well.
I totally agree with Udayan, honestly. Government has never encouraged speculative activity, but then that's part and parcel of every commercial and financial market. Crypto is no different. As Udayan rightly pointed out, cryptocurrency trades happen during the day. They're inter-trade at most 24 hours, 36 hours. And therefore, there's no reason why they should be. As a matter of fact, at 30%, they are being taxed at a lower than the normal short-term capital gains. I mean, if you were trading in an unlisted security and you incurred a short-term capital gain, you would be actually taxed, in my case or in your case or in many other cases, at the highest marginal rate of above 40%. So 30% in that sense is not harsh at all. The positive thing, as I said earlier, is that in one sense, it's a recognition that we live in a world where these trades, digital trades and digital assets will be transferred. And you know, in some ways, it's a preamble to the cryptocurrency law that the government probably wants to introduce. So yes, for those who never paid tax on this so far, well, bad news. But for those of us who have paid tax regularly, short-term capital gains tax on unlisted, this is par for the course. I would urge the government to reduce the tax on unlisted capital gains also down to 30%.
You know, interestingly, this was a this was a budget not just in the shadow of the pandemic or coming out of the pandemic, but also in the shadow of the election. And to the credit of the government, they haven't succumbed to any kind of mindless populism. You know, you have 5 state elections. There is that tendency to have those large welfare schemes announced. Shankar Iyer, to that extent, is that seen as a positive? Because you've been arguing that the government doesn't do a good job with these mega elephantine welfare schemes. Is that a sense that that's how the Modi government is trying in some way to keep the economy in a way separate from its political moves, not succumb to political populism in an election year?
Ironically, Rajdeep, the economic necessity of the country and the political necessity of the government were quite aligned at the bottom of the pyramid, which is basically the electoral base. But they haven't done much, and I suspect that we should not pat ourselves or not sort of feel too gleeful about it, because that might come in some manifesto form or in some promise that is being made in those 5 states. And remember that the state governments are not bound by what the central government asks them to spend on. There are boundaries that they draw. But there has been no curb on the state government borrowings. They have been given extra money, and that some green bond thing will go. And we do know that 2.5% to 3% or roughly 5 lakh crores of cash is lying with the state governments. So there is reason to be pleased that this budget didn't go overboard and try out a new scheme. But there is also reason to be concerned because something might pop up at the state level. So my sense of this is that actually it's a welcome mode of conservatism. It sort of shows that the government understands that it is at high debt levels and servicing. I mean, if you're borrowing 15 lakh crores, that's a humongous sum to service. And you can't keep borrowing from the future generation at some level.
Udayan, you had a question. Go ahead.
No, Rajdeep, what I think would be most instructive now is to have Mr. Garg actually re-explain why he thinks that the 2 lakh crores of additional capex spend, because this budget is only good if we are talking about this 2 lakh crores of extra capex spend in this year. I mean, that's the crux of why everybody is feeling positive that there is going to be more infrastructure spending. But Mr. Garg seemed to say that this is connected to the green bonds issue, and therefore we are not going to get 2 lakh crores of extra investment. I just want him to repeat that and then get Ashok and Nirmal to respond to that, because I'm sure both would be quite excited about this extra capex push. But Mr. Garg, why do you think that this is not going to be the case? We are not looking at an additional 2 lakh crores of capex from the government this year.
So, Udayan, there are 2 announcements about the loans to the state, which is part of the capex plan. One, this year's allocation has been raised from 10 to 15,000 crore. And second is that next year, the government of India will give to the states 1 lakh crore of loans for capital investment. Now that, and the states' overall borrowing remains same as for the current year. And therefore, the states will get their overall borrowing substituted from the market by the central government loans. So of the 2 lakh crores of the additional capex, 1 lakh crore gets accounted for by the loans given by the central government to the states, substituted by the states for the market borrowings. That's one. Second announce, which as I heard, I would see the numbers coming more clearly in the papers, was that she said that we will issue green bonds. The government of India will issue green bonds, and the green bonds would be given to the central public sector undertakings for their investments in the green assets, right? Now, The CPSUs like the NTPC or NHPC or IREDA, they currently borrow, they can also borrow the green bonds from the market. Now, if the government of logic can be clear that the government of India can probably borrow at slightly lower cost than these CPSUs. So if the idea is that you borrow on the government of India account, maybe 0.5% cheaper than the these corporates borrowing, and these corporates don't in turn borrow from the market. So if this amount is also about 1 lakh crore, we have to see the numbers. Then that's what my sense is, that the 2 lakh crore of the increased capex actually is only substitution of two kinds of borrowings by the state and the CPSUs. It's not additional capex. I would need to see the numbers.
I certainly hope, and I don't mean this badly, Mr. Garg, that you are wrong about this, because, she made such a, it was like a table-thumping assertion of greater commitment towards capex. She said that I have prioritized growth and I want to increase capex by 35%, and therefore the layout goes up from 5.54 to 7.5 lakh crores. If all the way she had in mind that these are actually only substitutions of green bonds and state interest-free loans, would she have made such a strong assertion on this in the parliament? Nirmal, what do you think? Do you agree that this is not additional capex? It's just being positioned as such? No, I can't hear Nirmal. Did Nirmal get my question?
Hello, can you hear me?
No, maybe.
Hello. Hello, can you hear me?
You want to
Yeah, Nirmal, go ahead.
Concern on capex?
On here. Hello?
Yeah, go ahead.
Can you hear me now?
Yes.
Yeah. So I'm saying that the government spending plan on capex and how do they want to fund it? At least I have not come across that they are linked and that they raise the green bond. So the capex budget is different, and the funding plans have many things which can include green bonds and other things. So I personally do not think that there is any that the actual expenditure will not be 7.5 but 5.5 lakh crore. I think even this year government increased the capex spend and they are quite committed. And the fact that they are living with a higher fiscal deficit and higher borrowing obviously shows that there's extra money required despite tax buoyancy, and that is required for capex.
Let's take a break at this point because we have advertising commitments and we haven't taken one for a couple of hours. It was a relatively shorter speech, so that made life a little easier.